The housing market has finally started to crack, and it's becoming clear that certain Wall Street firms are setting themselves up to take maximum advantage of lower real estate prices. We could be about to see a massive real estate wealth transfer take place, and today I'll be looking closer at how big money plans to make big profit and who will potentially lose out in all of this. So firstly, a quick recap on the current state of the housing market. So when we look at some of the key data in the housing market, it's becoming clear that the housing market bubble has just popped and we're on the verge of a major correction or crash. So specifically looking at home builder confidence, it did recently hit a 2-year low due to the impact of inflation on the economy, as well as dwindling expectations for current and future home sales. So many home builders are starting to fear that the current economic conditions will cause a correction in the housing market, so are being a lot more cautious on starting new development projects. Current market data shows that both average sale price and average asking price are also starting to drop, and July's expected home sales came in under the analyst expectations. And then forward-looking indicators also look quite bad, with mortgage applications on the decline and expected future mortgage rates being higher than they are right now. And then on top of this, Goldman Sachs Affordability Index does show that the affordability of housing is now the lowest it has been since just before the 2008 global financial crisis. So that is very concerning. With economists expecting the interest rate to keep rising for the foreseeable future in order to combat out of control inflation, this is likely to lead to, unfortunately, rising unemployment based on historical data showing a correlation between these two metrics. And if unemployment does rise, then not only are we more likely to have a recession, but it also means that in general people will have less money and less income, reducing demand for mortgages even further. I did make a full video going more into depth on this topic in my last video, so check that out if you want to see a more detailed version of the current housing market conditions. So it's looking like certain Wall Street firms, specifically Blackstone for the time being, want to actually take people's homes from them. Now, institutional and private equity investment funds are the largest holders of real estate across the US and therefore have more influence over the market than any individual investor could possibly have. This makes sense because institutional real estate portfolios do have access to billions of dollars in pooled capital, allowing them to buy many units of diversified real estate and expand their portfolio to large values in the billions. So for those that haven't heard of Blackstone before, they are a leading global investment business investing capital across a range of alternative asset classes on behalf of pension funds, large institutions and also individuals. So real estate is their largest asset class, where they currently have $320 billion in investor capital under management and a global real estate portfolio value of $550 billion. Now, this does make them one of the global powerhouses in real estate. Now, this portfolio is about to get even bigger, as recently Blackstone announced that they have raised just over $24 billion in fresh new capital over the last 3 months. And this is for their latest opportunistic real estate fund called Blackstone Real Estate Partners X. Now, combined with existing capital that they had available, as well as the funds that they have available for real estate in Asia and Europe, Blackstone will now have more than $50 billion available for opportunistic real estate investments. And what's even more interesting in this is that only 12% of these funds have been invested so far. Blackstone therefore have a large amount of capital on the sidelines ready to pounce whenever they see fit. Now, nobody really knows the intricacies behind the strategy of this fund. However, I think it's fair to speculate that Blackstone believe that the real estate market could drop quite a bit in the future, and raising this capital now gives them the opportunity to take advantage of any potential market decline that we see in the future, allowing Blackstone to maximise returns, sweeping up on any cheap real estate deals that come to market. And the fact that they've only deployed 12% of this capital so far does suggest that they are being quite cautious at the current asset prices, and they are expecting real estate prices to drop in the future. So Blackstone's real estate portfolio doesn't solely consist of residential homes, as this is just one area of real estate that they specialise and prioritise in, but they are also heavily invested in e-commerce warehouses, office buildings, and also hospitality buildings related to travel and leisure. But the residential rental home portfolio that they do currently have is large enough to make them the largest US residential landlord that is out there right now. So how does all of this come together to form a potential real estate wealth transfer over the next couple of years? So with Blackstone raising such a large amount of capital to deploy into the markets over the next year or so, we could be about to see a large real estate wealth transfer that takes place. Now, this is because institutional money and private equity firms do have access to the most capital, especially compared to individual investors, and this gives them a better opportunity to make money in the future in the form of cheap real estate that comes onto the market. Now, depending on how high inflation does get, and also how high the interest rates get, as well as just how bad the economy gets in general, we could see everyday normal people suffer financially. Now, this could lead to them having to potentially sell their home to pay off debt, and we could therefore see an increase in mortgage defaults and foreclosures that are taking place in the housing market, and therefore a flurry of houses entering the market in the form of desperate sellers who can't keep up with their mortgage payments. We could see a lot of discounts available for large institutional firms to swoop in and buy up. And I'd be willing to bet that Blackstone is not the only firm that has money sitting on the sidelines right now. There are many other big institutional players that most likely already have a large pool of cash available for opportunities like this to come up, or at the very least they have the potential to raise a large amount of money at a short notice. So I therefore believe that this could lead to a wealth transfer taking place across America, where houses are transferred from distressed owners who ran into financial trouble into the hands of large Wall Street firms who have large financial power and backing, which gives them the ability to buy up these houses. So overall, I think that there could be a big shift in ownership of real estate, with institutional investors growing their share of the total number of homes taken away from the everyday individual and family owners. So there has been quite a lot of discussion recently around generation rent, with many people concerned how high house prices have gotten and how unaffordable home ownership now is for many people. So if we do see home ownership shift from individuals and families to Wall Street firms, then this will only amplify the problem around not being able to own a home and being at the mercy of landlords who can raise rents as and when they like. Now, it's important to consider though that government intervention could come in to help and help out people, as governments could choose to put in some sort of restriction on home ownership or rent increases, making affordability better. But obviously if they don't do that, then landlords, whoever they may be, will still have the freedom to raise rents as and when they like. So is this bullish or bearish for the housing market? I do think it's both, and it's definitely bearish to see large firms build up their cash reserves to get ready for a significant market correction so that they can take advantage of the lower prices. This is a sign that they definitely believe that the housing market is overvalued right now, and suggests that they don't think it's a good idea or good value to get involved today. It also does suggest that they believe a market correction is on the horizon, where we will finally see some noteworthy drops in real estate for the first time in a long time. However, I also do actually think that it's bullish as well. Knowing that there is a lot of money out there just sitting on the sidelines ready to mop up when the market falls, makes me think that there is a limit to how far the housing market could fall. Because of this, I find it hard to see that the market could crash very violently, sort of 50% or more, when it's quite likely that there are a lot of firms out there that are sitting on cash right now, ready to buy the dip, and this would obviously stabilise the price of real estate before it can ever reach this low or even go lower than that. So that was all for today's video. I definitely do think it's quite interesting to see the advancements that are happening with Wall Street firms and what's going on with Blackstone raising so much money at quite a short notice, specifically for opportunistic real estate. And I do definitely think that it is a potential for a wealth transfer to take place in the real estate market from your average everyday person into Wall Street firms. But obviously this video is purely based on my own thoughts and opinions, based on my own research. I'm not a financial advisor, and this video is not financial advice. It's just for purely entertainment purposes only. Aside from that though, if you did enjoy the video, please be sure to leave a like, as that does help out a lot. Drop me a comment as well. Let me know what your thoughts are on this Blackstone development and what they're doing with raising this money. I'd be really interested to see. Also be sure to subscribe if you want to see similar videos to this in the future. And apart from that guys, thanks a lot for watching.